It's a new year, 2018. What's going to happen? What's up, everybody? Welcome aboard to Bubba's Bottom Line, our weekly edition of what's going on in markets and what we expect in the near future. And here we are. We just finished 2017. Well, not quite yet, but soon, tonight at midnight. But at the end of the day, what was 2017 all about? And I think we could look at 2017 as the year of the continued stock market, the year of no fear. President Donald Trump is here. I mean, we had regulations lifted. We had markets that knew no bottom. And not one time during the year of 2017 was there a 3% correction, or not a correction, but a 3% sell-off. So here we are at almost at all-time new record highs. Obviously, Friday was a little bit of a sell-off, but no surprise. I think that happens many, many years at the last day of the year, the last minute of the year. But you had the year of the cryptocurrency. All right, the explosion of Bitcoin and the explosion of Ethereum and others, and there's now, I think, about 1,400 cryptocurrencies out there now. You know, which is real and which is not. I mean, at the end of the day, is it a financial revolution, which is what my contention is against the Fed and the government? You know, again, there's a lot of ways to look at it. Everybody on TV will tell you that they're nothing but more than a bubble. All right, are they? I don't really have the answer, but I would say this to you. If you remember Seinfeld, they're real and they're spectacular, and I think that cryptocurrencies are here to stay, and I think that they're going to be a part of what's going on. I do think that you're looking at I do believe this is a financial revolution. I think this is a way for the common man and the average guy to fight back and try to get away from the elimination and the manipulation of currency throughout the globe. So we had the FANG stocks were the big story almost every single day, and Amazon going to the moon, and Facebook and BUBBA, and just, you know, you name it, they're all near all-time record highs. But what did we really see throughout the year? And I think this is one of the things that we want to look at here is we've got the economy. Now, did the economy really improve? Is the economy as good as everybody says it is? My personal answer is no. My personal answer is a bunch of BS. However, I can't fight the numbers that they're putting out there, and I can't fight what appears to be looking like a solid recovery. I don't see it. I don't like the numbers. I think, and we're going to get to that in our commentary, but the numbers never lie, but the people report them do. And I think that's one of the issues that we're overlooking in what's going on. I think when you look at, you know, the masses, okay, not the rich. The rich are going to always make money. That is part of the way it is. The rich get richer. That's a natural order forever, because the rich can buy. Mr. Potter can step in in the times of most trouble, when everybody's panicking, and take advantage of those situations. And I have no issue with that. That is not the problem. We had the new tax plan in 2017. Is it as good as everybody wants to make it out to be? Again, personally, I believe that President Trump settled for less just because he wanted to get a major victory. I think there's even so much confusion around this bill on whether or not to prepay property tax for those states that you're in. And now there's a story coming out that these taxes, if you haven't been billed for them, you can't pay them. So here's another issue, but again, I think this really put more pressure on small business. I think as low as the rates have become, I think this makes it even more possible to put out of business small business versus helping small business. If you think about it, okay, small business came down to about 25%. So let's say they get a raise of 10, 12% on their taxes by what they're going to save. But big business got a bigger cut. And of course, big business is already the advantage because of their cost of labor, their cost of goods, the cost of everything it is to do what they do is cheaper. So I think this is more of a situation that they're going to eliminate small business and not benefit the small business, which is the entire key to any economy, is the little guys. So we take a look at this part of the equation, which again, I don't look at it as being great. Now again, you've noticed the stock market continues to go up because the stock market only cares about one thing, and that would be profits and earnings from their companies. Well, I mean, certainly the profits were good, especially based on the lowered expectations that we were given. So where's your money going to go? You know, if you look at this as I do, in somewhat of a collusionary vision, then, you know, the Fed, by their monetary policy, forced every investor into equities. You have nowhere else to go. All right? Well, you can go to cryptocurrencies, but again, obviously very high risk at this point in time, and there's nothing wrong with it. Again, I went from an anti to a fan. Okay, and in fact, I just purchased some of my first cryptocurrencies ever. So again, I'm not overly invested. So it's not like, you know, unless I get another move in the ones I bought, like Bitcoin, it's going to be just another trade or an investment. Okay, but my simple point is this: is for the average investor, they forced everybody into the equity market. You know, there's a lot of people out there that would like to be just in a CD at the bank, even at 4 or 5%. You can't get it. So you've taken the population and said, okay, you want to grow your money, you want to compound your money. You can only do it if you put it in equities. Now, normally that's not a horrible thing because, as you know, I firmly believe that equities are the best place to be invested, which is why I don't sell equities when I buy them. I just hedge them. But now you've forced everybody into it. You've got a lot of weak hands, as they say, in the markets that can't wait to sell. So this is what the policy has done. You've reduced the ability for a small business. You have now weakened the jobs market. Yes, the unemployment rate is unbelievable. It's going to be under 4% soon, or maybe it is already. I don't even remember. But at the end of the day, is that good or bad? I say it's bad. I say the lower the unemployment is, the more you force people to work, the less competition there is to hire people, and that does not bring up wages. So again, we go back to this free market society, which we really don't have right now. All right? We have a controlled, manipulated society, not a free market society. Because when you take out the equation of the small guys, of the small business, you take out their opportunities to make as much profit, you then eliminate a lot of good jobs, because small business has to hire many jack of all trades type of people. They can't just specialize. So they've got to get people that can do a lot of different tasks at one time, so they pay them more. Well, that has been somewhat eliminated. Now, the big story of the tax plan as well, which we continue to hear be trumpeted, get that? Anyways, the big story here is that the money that's going to be repatriated back here is going to go into the economy. And I say, BS. I say that these companies take that money and they just buy back their stock, which again, I do the same thing. I am not criticizing those who would buy back their stock. I am saying that I personally would do the same thing. All right. So you're going to see the stocks grow, their earnings will be good, but are they really stimulating the economy? And of course, the answer is no. But of course, one thing we have to remember is that the economy and the stock market are not related. Okay, so we can talk about it all we want, they're not related. So this Friday, when the jobs number comes out, and when you start to see some of those reports, and we're going to head up some of this in our commentary today, but just remember, all right, is it as good as it appears? And the answer in my eyes is no. Okay, so as I look back, I can't knock the stock market. I did try to fight it a couple of times, but as I want to make clear, when I'm fighting the stock market, I'm fighting it as a trader, but I'm still, as an investor, I'm still in for the long term. And that's the advantage when you know how to hedge your portfolio versus just sit there like a lump and hope that it doesn't go down too far. And that's where a lot of these issues are going to come in and find problems, is for those simple reasons. So as a trader, I'm very bearish and getting more bearish every day. But as an investor, I'm happy to take the money. There's nothing wrong with it, okay? So now, as we look at what's going to happen in the future, and of course, there's already starting to be many restrictions of major governments trying to affect the cryptocurrency world, and we'll use Bitcoin because that's obviously the biggest name right now. But South Korea is going to eliminate the ability and trying to even close the exchanges. They're, now how they're going to do it, I don't think it can be done. This part I don't know as much about, but the cryptocurrency world, I don't know how any government can get involved in it. All right, I don't know how they can actually control it because it's hard to find it. But they're trying to cut down, and they're not the only. There's many out there, and I think this is a big sign that shows us how much fear that governments have about this new space. Because again, if it does work, which I believe it's going to, and I believe it's a revolution. If it does work, and it is the revolution I think it is, then what's going to happen is the central banking systems around the globe are going to lose some of their power. And they're going to lose some of their ability to manipulate the currencies around. So I think that becomes an issue. And I think one of the things we look at is what are the things that are surrounding it. So right now, the central banking systems and the governments are starting to panic a little bit about the problems that Bitcoin and the cryptocurrency space might create. You've also got China looking to crack down and put on some new controls on Bitcoin. Now, again, what kind of control can they have? I mean, they can't monitor every site, nor they know, supposedly, and again, some of this I don't know per 100%, but supposedly, from my understanding, is that you can't really identify it. And I mean, my account doesn't have my name on it, so I'm just wondering, where they think they're going to actually crack down and start to control this. But I think this is going to be a big story in 2018, and it may be the collapse of the Bitcoin. It may be just the resolving of the bubble. Again, if you compare Bitcoin at all to the internet bubble of the 90s, all right, then the internet is doing just fine, thank you very much. They didn't all make it, but they're doing just fine. And I did interview the first central bank, or not first central bank, excuse me, the world's first cryptocurrency bank. So I think it's an interesting dynamic, and I think that, again, one of the nice things about the cryptocurrencies is they trade 24 hours a day, every day. You can turn on right now, and if you want to trade them, you can trade them. Looking at the other thing is going forward, okay, are we going to continue to see potential growth? Now, again, I could tend to argue with the growth that we have right now. I don't necessarily think that it's really as good as everybody makes it out to be. And again, if you remember the example that a $1,000 bottle of wine and $1,000 put into a manufacturing plant have the same measure against GDP, which is better. And I think one of the things we're seeing is a much more artificial growth than we're seeing actual real growth. And the way that you can translate real growth is when it translates into jobs. And that, again, the good jobs, the wage increase, we are not seeing. So as we look through into what's going to happen, I mean, there's certainly no reason to fight the stock market at this point in time. Certainly, we're not going to tell you to short the market as an investor. I would never tell you to get out of your long-term investments. I'm a believer that you just keep on buying. All right, you buy highs, you buy lows as an investor, but also try to be hedged if you can, if you understand how to do it. So we look at some of the other issues that are circling around the economies. But before we do, we're going to step out of here for a break. This is Bubba's Bottom Line. Todd Bubba Horwitz, and of course, this is either our last show of the year or our first show of next year. You take your choice. Pick your poison. Anyways, I want to remind you, check out highschoolinvesting.com. This year, for everybody, and all of you who gave in the past, which I certainly appreciate all of you, we're going to give you access to the site itself so you can get some education on what we believe in and how we teach the markets. And you'll get the same curriculum that high school kids get, because we're looking for your help, and this is it's a great value because it is done extremely well, and it is a great curriculum to take you from the beginning to the end of trading so that you have a great understanding. All you have to do to help me out there is go to patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. When you make your first donation, you'll get sent a link and a password and username so that you too can now check it out. That's patreon.com/Bubba Trading. And in the meantime, don't forget to get the Bubba Show every single day at libertytalk.fm between 2 and 3 Eastern Time. It's live, where you can download the show later. But we do a daily radio show for you. So again, great things for you to look at and great things for you to do. In the meantime, this is Bubba's Bottom Line, and let's get back to the show. Welcome back. It's Bubba's Bottom Line. Todd Bubba Horwitz on this New Year's edition. And, you know, I think when we left, we talked about GDP and we talked about some of the growth issues, which, again, I don't see them. And I don't want to be negative. I'm not trying to convince you to do anything different, because one of the things we know, we can't fight what's going on. But the United States of America is in the 4th worst shape in debt versus GDP in the world. All right? The debt number, the debt model is sick, okay? And this is one of the things that bothers me about the bubble that we're in, because I'm calling this market, and you can call it as strong as you want. You can say, hey, you're a whatever you are. You know, you can call me names. It's all right. I've been called worse. I guarantee whatever you're going to call me, I've been called worse. But what I can tell you is that the debt is so high, it's twice what the debt was in the housing bubble, okay? Now we talk about how great the housing market is today. Do you realize that there's starting to be some more no-doc loans again? Do you realize that a lot of these housing sales are being bought up by a lot of the major funds out there, and they're actually turning around and renting them? Do you realize that the inventory for the housing that's in demand has been swallowed up by groups versus individuals? All right, so again, you know, if you put the focus on the money is still hard to be borrowed for many, and banks are getting closer to getting the spread wider where they're going to put money out there. But in the meantime, the big guys can still take in that cheap money and then turn it into one hell of an investment. So remember that, you know, not is all as it appears, okay? And when somebody tells you something, when a major bank makes a major call about a market, you can usually bet that they're looking at the other side of that market, and they're trying to create their own market. So if they tell you that the markets are going to make brand new highs, we're going to the moon, you can bet they're probably looking to sell into that buyers, because they know they're going to create their own market by sending in some buyers. So I think this is one of the things that's a problem. I think the other thing we look at is, you know, you hear daily about the massive Christmas sales. We had a great Christmas season. I don't know, I went to a few stores, there wasn't too many people in there. I know Amazon did a big job, but I ask you this, okay? The first thing is what are the profits going to be on these Christmas sales, number one, okay? Number two, how is the average American that created an immense amount of debt again through Christmas? And I'm not thinking about the debt we were talking about before, auto loans, student loans, and other things. Now I'm talking about brand new debt that's going to have to pay at such an exorbitant rate, almost usury rates from our great credit card companies that take you right up to the limits. All right, how's that money going to be paid back? You know, Americans have started spending once again more than they're making. So we're not getting wage growth, but we're getting debt growth. Debt, again, is the end of any market when it finally plays itself through. Now, again, it could play itself tomorrow or next year. There's no telling or timing this market when it may or may not go the other way. But I will guarantee that in the year 2018, there will be a 3% sell-off at some point, all right? Maybe even a real correction, right? We don't know that, right? I can't, and I could honestly say, I mean, I think there will be. I think we're going to have some ugly times coming, you know, not right away, but soon. But in the meantime, I can't predict it, and I'm not going to put my reputation of calling a market. You know, guys can call what they want all the time. You know, the guy, I can never remember his name, David Stockman, has been calling for the collapse for the last 8,000 points in the market, right? So you want to keep calling for a collapse? Okay, great. But in the meantime, the markets keep going up. So you can talk about how bad everything is. And I'm giving you things that are bad, but I'm telling you at the same time that the markets don't necessarily care. You know, so one thing doesn't necessarily have to do with the other, all right? But I think that you've got to look down at where the earnings are going to be. Okay, you've got to look at where the companies are going to be, and you got to look at, is there going to be a creation of new jobs? You know, the biggest problem we have here that doesn't get talked about much as well is what we call the velocity of money. The money is not moving. It's not, you know, you'll remember the trickle-down theory. Well, the money never trickled down. That was always a bunch of hogwash to begin with. But the velocity of money, the money changing hands from one pocket to another, has become non-existent. And that's another issue that we have to take a look at and be concerned about because of how the economies work, all right, and because of how we need to see money flowing. Now, I think we saw something interesting over the last year as well, and I think that was in the oil markets. You know, for about 16 months now, OPEC has been trying to manipulate the price of oil along with Saudi Arabia to get it higher, and they finally got it to pop over 60. But I think that pop is first of all very artificial, because if you look at the formation in crude, February and March crude are more expensive than May, June, and July. Now, that's not the right relationship. It's supposed to get more expensive as you go out in time. But it's called backwardation. But I think this is just telling me that there's just some fear, and we know that Iran or Iraq bombed a pipeline. I know that there's some issues in the Mideast, but again, I always ask the question, why are we concerned with the Mideast? That could only help us. We've got enough oil, we could start pumping. We're already a net exporter to begin with. So I think that becomes another issue that we need to realize and look at. So, you know, as you look at some of the trades at the end of the year here, you know, look at gold. Gold looked like it had broken down and is now turned around and is now possibly on a run to new highs. You know, again, we'll have to watch it. I still think it's got one more pullback in it, but again, we'll have to watch it. The bond markets made a late run at the end of the year, but again, that was dropping interest rates. And I think we have to be very concerned about what they call the yield curve, which is the short-term interest rates to long-term interest rates. They're supposed to go like this and like this, okay? And what's happening is they're starting to go more flat, and there's always the potential that the rates can invert, which means they could push short-term rates up too high, long-term rates could fall, and they could invert, which is it's always a sign of a recession, as well as the low jobs number is also a sign of a recession coming. So if you tie all the things in, then you can see a potential recession. And I guess my real question is do you all think that the recession has ever really left the markets? Has it left the middle class? And I think that my answer has been no. I've always felt that the middle class has never left the recession. Now, maybe your 401ks are doing better because of the markets are doing better, but your actual day-to-day living, I think, has not really improved much. And that's what I think is the bigger issue. I think there's a lot of things that we have to think about. And when we look at what we call this recovery, all right, because all we've really done in this recovery is create massive amounts of more new debt. And we haven't really improved upon everything else. So to me, that becomes a bigger issue when we see the model. And the model, to me, does not look good, okay? It doesn't seem to be a great positive spin as I look out into the future and I see all the people that are not working and I see the jobs that are available. And I see major companies trying to still make some major cuts, which is cutting down on the opportunity and the ability for people to make money. So yes, maybe AT&T and some of the other companies have paid out some bonuses over time, but again, it's cheaper for them to pay the bonus than to pay the taxes. So there's a whole bunch of stuff that goes on with this whole thing, and it'll work its way through the system. But remember, no market goes up forever, and it's going to have some sort of correction. And I believe that at this point in time, right now, all the markets are searching for is why. And we'll see. Again, I'm not telling you it's going to happen tomorrow. I can only tell you that Friday's action was a key reversal in the S&P. Now, that we have seen a number of these over the past years, and they have never proven to be the point. So I'm not going to fall into the trap, you know, the banana in the tailpipe. I'm not going to fall into the trap of thinking that this is the end. I'm going to sit here and watch and wait for solid footprints. I think you've got some major issues. Look at the farming goods. Look at the products. Okay. Grains, the farmers this year, as they're sitting doing their marketing plans here in January, are going to have a problem because they're going to have to plant at a loss. So they're going to go out and borrow a lot of money to go ahead and put their crop into the ground at a loss to begin with, and have to hope that for some way we get things going higher. You know, we've got problems in commodities. The dollar has been, you know, slammed again. I think the dollar's a screaming buy. By the by, I think the dollar's a screaming buy. If I were going to give you today a number of trades that I felt were things that I would be looking at, or things I already own, which are true, okay, I would be looking to buy the grain markets, corn and wheat especially. I would be looking to buy the dollar, okay? Now that sounds like a counter, but of course I don't think the dollar has as much effect anymore. And I think that I'd be looking to short the indexes for now. Again, remember, stock markets do go up 8% year over year, just not every year. So I think we look for some sort of thing. But I think you look for value in these markets now, and I think the value comes in a lot of the agricultural products. That's what I'd be looking for, and of course we'll talk more as the year goes on. But in the meantime, we're going to step out here for a break and come back with my commentary. The first commentary of the year. This is Bubba's Bottom Line, Todd Bubba Horwitz. I'll be right back with more after the break. You know, don't forget, guys, highschoolinvesting.com. You know, I've been educating these guys. In 7th year, we're starting right now. And of course, I've paid for it myself entirely. I started to get a little help last quarter when we went to Patreon. And thank you, Melanie, and thank you, John, and thank you, Mike, and thank you, Susie, and the rest that have shared with us. It's certainly appreciated, and Trader Jeff, and you know, again, all of you who have stepped up, I really appreciate it, okay? And this year we're going to make available to you as part of that, and of course those who gave last year as well are going to get a login into the system where you can get some free education yourself and kind of see what we're teaching. In the meantime, don't forget to get the Bubba Show every single day, 2 to 3 Eastern at LibertyTalk.fm. As it plays live, and of course you can get the download there as well. And make sure that you always tune in Bubba's Daily Updates. Every day we send them out, and of course we do Bubba's Bottom Line on over the weekend and do our 30-minute show. So remember to do all those things to help yourself and help us. And welcome back to Bubba's Bottom Line. And of course, what would a show be without me voicing my bitching or commentaries at the end? Well, I guess I get to do it the whole show, but again, this is where I get to actually title it that way. Anyways, so, you know, again, I'm not fighting the stock market, and I never have. You know, as a short-term trader, I sometimes do, but again, as an investor, I don't sell, so I'm always in. But what I want to talk about here, and what really bothers me, is the way that numbers are reported. And, you know, I use the title or the term, numbers never lie, only the people that report them do. And I think this is something that is really becoming very, very upsetting and very depressing as we watch things happen. And I'm just going to give you a couple of examples today. You know, everybody sits on their edge of their chair waiting for the Michigan sentiment or the Philadelphia Fed or the Chicago PMI numbers to come out. You know, they come out once a month, and what are they going to be, or GDP. Do we realize that those are the most manipulated garbage numbers that there are? Do you realize, or maybe you don't know this, okay, that the Michigan Sentiment Survey is done with 500 phone calls, okay? So they're calling 500 people and asking them questions. I don't know what the questionnaire is, but whatever it is, all right? So 500 people. I thought it was 5,000. I looked it up because I wanted to make sure. 500 people, okay? Well, is that a representation of you and me? Did they pick 500 people from all walks of life? Or they pick 500 people at random? I mean, I don't know, but I'm just saying 500 people as a survey. Does that give you a true and honest view? So we make the numbers out to be what they are, and they go off, you know, a calculator off of, well, this is the word should be. I don't know. I mean, and then of course there's the Chicago Purchasing Managers Index, PMI, right, where they call 400 people, or they send out a mailing for 400 people. Think about the census, you know, and some of the things you get. Do you always just take the time to go through it exactly? But 400. I mean, what is there? Only 500 businesses in the United States of America? I mean, you know, there's 20 billion. No, billion is probably a little bit. 20 million, right? But we're getting a grasp from 400. And of course, the Philadelphia Fed. So we get all these numbers, and then they can conglomerate them up, and they put them out there, and of course, the markets get some reaction, and the pundits go crazy, start drooling. Oh my God, we're at 120% sentiment. Oh, well, we're going to the moon. I ask you, okay, They then come back and they adjust those numbers. They redo them. When they're really bad, they revise them up. And when they're really good, they revise them down. What do they mean? That's the real question. So are we really thinking that we're going to stake everything that we do on what 400 people say in one survey or 500 people say in another survey? I don't know. Again, I wonder, you know, the old joke was when you get a government number, which is already trailing the market, is do they really know how to count? Okay, and based on the $25 trillion debt we have, I would say probably the answer is no. They don't know how to count. So when you get these things from the feds and from the different areas, I think you have to really question. And I think the easiest way to question is to look in your own. Look at your neighbors, look at your friends, look at your own life. If everything's great, God bless, I'm thrilled, okay? But I think that we'll find that more are not in that position than are. And I think that's one of the problems that we just have to address. And I think the reporting of even the jobs numbers that come out are bunk, okay? Let's go back to the old days and use the U6 instead of the U3. Let's change the way they report so we can get an actual accurate reporting. But more importantly, let's have everybody have a happy, healthy, prosperous New Year. I look forward to serving you each and every day with the Bubba's Daily Update and, of course, weekly with Bubba's Bottom Line. And I always appreciate that you're a part of the show. And let's kill them in 2018, and let's all live happy, healthy, prosperous, and enjoy life. Happy New Year, everybody. Thank you so much for being a part of it. Bubba signing off. Into 2018 we go. Good night, everybody.